In today's video, I'm gonna show you how I view the markets unlike anyone else, because once you come into trading, they usually tell you the markets move like this. But when you go on live markets, it's something that's the complete opposite. So what you gotta understand is that the markets typically move like a range, going from one liquidity to another to another. And even if we are on a trend market, it still tends to sweep liquidity like this, going up, sweeping an inducement, and then going higher, because liquidity is fuel, right? If the market really moved like this, then I would have just buy here, and both me and you would have been gazillionaires, right? But it isn't that simple. We're on H4 here on ES, and as you can see, even if we're going up, we're always sweeping some liquidity below, right? We're always sweeping something below to then sweep something above to then come back to sweep it. And right now to potentially go where? To the upside. We go from one liquidity to another, and you can interpret these liquidities like the smart money traps, which I usually like to say, that people will be trying to buy here, short here, buy here, and short here. As you can see, these end up being a trap. But the markets are fractal, so we can take this example to the lower time frames and actually apply it to our day trading. So during the day, the best case scenario that you want to see is AMD, accumulation, manipulation here, and then a distribution. All right, and you want to be positioning yourself on the manipulation in order to take advantage of the distribution. Meaning the accumulation will be some sort of consolidation, the manipulation will be a liquidity sweep, and then the distribution, well, it will be the move from your trade. And that move will only be delivered once everybody's been taken out of the markets, because that's where I position myself. And by taking people out of the markets, it can often mean stop loss, but it can also be take profits. And so what you want to see is structure being swept in order to search for another structure. So even if we go higher, we have to sweep something below. And liquidity can be anything. Like I've said, liquidity above every single high and below every single low. It doesn't necessarily mean it's just equal highs, equal lows, trend lines. All right, there's way more to that, like previous daily highs, previous daily lows, sessions liquidity. So in my indicator, just for reference, the yellow box is Asia, the blue box is London session, the pink one is New York trap timing, which I do not trade, and this orange one is New York session. Then you have some kill zones above and below, and this pink one just after New York is the London close session. So as we see here, price sweeps the previous daily high, right? So it sweeps this liquidity, it delivers a reaction, and that reaction goes towards the Asia lows. So maybe you could have had a buying trade over here. The only thing which I don't like is the timing, because it's a bit before market open. But then you could have had a buy here, simply because the SMC traders will be looking to position themselves here. Why? Because we swept the liquidity, and there's a sort of perfect target, which is these equal lows. This is why I call the perfect smart money trap, is when we have a liquidity sweep, we have a huge breaker structure made, and we have some equal lows as targets, because those are the only types of liquidity that they know, so those are the ones they target. Which they are valid, but oftentimes they always position themselves a bit too early on the trade. Now, because this was a trap, this would have become a trap, and vice versa, because this was a trap, this would have become a trap, and then this would have become a trap. Same thing which I've been mentioning. We go from one liquidity to another, to another, to another. And so this case is a bit special, because it would have been really difficult to position yourself here, as it was London close, and London close session tends to deliver some sort of traps, sometimes in futures. So it is a bit harder to position yourself. But in this scenario, even if you wanted to short here or buy after this liquidity sweep, make sure you do it at a spot. Meaning don't wait for price to come to your area to do your sweep of liquidity, do a huge breaker structure below, and now you have your confirmation that this zone is valid. So then once you try to take it on the retest, you'll just be stopped out, because it becomes too visible and too easy for it to become a trap. So I would just recommend you, if you are looking at these zones and you are looking at these liquidities, just trade them at the spot, right? Meaning, as soon as you see this, you go into the lower time frames and you try to position yourself on some M1 breaker structure, for example, or M5. But this day is a bit more complex. I'm gonna show you some better looking examples. If you go on the M5, okay, and we can see right here that, okay, we start the day off here. What we have? First, we have Asia, and we have the previous daily high to the upside, all right? Because this is the third This is the 4th of December. And so right now, as London comes, I've already told you that the current session likes to sweep the previous one. So London likes to sweep the highs and lows of Asia, as it did so right here. And then New York, which is the one that you're going to be looking to trade, at least on futures, likes to sweep the highs and lows of London and Asia if London didn't do so. In this scenario, you have the same case of the other day, which is an accumulation, a range, a consolidation, most likely going in Asia session and London session combined. The market opens, you get some volatility, you do the sweep of liquidity, meaning your manipulation right here. You try to trade it, because if we see some liquidity above, we most likely still have your liquidity below. And in this case, it ended up being the low of London session, which liquidated this on Asia. You can see here on the previous days, we were making some equal highs. You can see that we sweep them right here, right? We sweep some internal on the lower side to go for another liquidity, to then go for another liquidity, to then go to another liquidity. Always trapping SMC traders that will see these sweeps of liquidity as breaks of structures. And they're not breaks of structures. Most of the times, they're just liquidity sweeps. And if you saw this sweep of this structure as a break of structure, then you would be positioning your order right here or right here, and you would have been stopped out. As soon as we did so, you might have seen this sweep as another breaker structure to the downside, and you might have said to yourself, oh, we're not actually bullish because I got stopped out, we're actually bearish, so let me position my order right here at the top, and once market retests, I'll be in on the shorts. But you would have been stopped out again because market goes from one liquidity to another, and in the next day, your stop loss, this high right here, would have been the previous daily high. And in this case right here, there could have been some possible longs. The only thing is that it becomes a bit too late. As price keeps playing around here, it becomes London close. And if you remember what I said, London close tends to sometimes do a smart money trap. So we're doing breaks of structure to the upside, and then a violent move to the downside, a sell in order to buy. And this ended up being the good low instead of this one, even though some buys from here could have been valid. It is a stop loss. We can't win all the time. If you're a prop firm trader, you should be using Prop Firm Match. I've been using their platform for years, and every single time I want to buy a new challenge, this is the first place I check. Instead of going to each firm's website and opening 15 tabs and compare every single one of them, you can just check Prop Firm Match and compare every major firm side by side, everything in one place. You can filter by rules, drawdown types, profit targets, if the firm has MetaTrader, if the firm has CTrader, if it's a Forex firm, if it's a futures firm. And the best part is that Prop Firm Match tracks the highest discount going across all the prop firms. So you're always seeing the best pricing for each challenge. For anyone that's looking to diversify the prop firm allocation and look for the best opportunities in prop firm space, I'll leave a link to Prop Firm Match in the description. Going to the next day, what do we have? We have still some liquidity to the left. This is an inducement on higher time frame. It's this high right here. So we can see that price is most likely going to go towards these levels on the higher time frame. But there is this structure right here, which is also a trap. But if you think that price is going to do this huge move and then do a huge move to come back and then make it work out, it's going to be difficult. It's most likely to become a trap. And so we have this inducement sweep, but we also looking for price to continue to the upside. The thing is, as soon as we do this inducement sweep, we might have a reaction from it. And a reaction on the higher time frame, regardless if it's small, it could mean a reaction big enough on the lower time frames to give you a win on the day. I wouldn't suggest you to trade before market open, but there could be some possible longs here because we just had Asia sweep. All right, we just had a sweep of liquidity, and we have liquidity to the opposite direction. This is what you would like to see. And the same thing I told you on the higher time frame, it's applicable here because market's fractal. You can see that this will become a trap because it didn't sweep no liquidity, and it did this huge meltdown. So definitely traders would have been putting their orders around here in order to short. Where market completely disrespected that, it went for this higher liquidity because the liquidity on the higher time frame will always be more relevant than the ones on the lower time frame. So in this case, we have market before opening doing a sweep of liquidity, but at the moment of opening, we have this previous daily low, we have the inducement on the higher time frame, and we have Asia highs. So market open decides to go up, and then as we see some liquidity, we have liquidity to the downside because this already made this huge move, right? And you can see that the next day we ended up trapping it. So here again, you could have had either a fixed risk reward of 3 or whatever you like to take, or the structure. The smart money trap cycle, the whole structure depends on you and if you can hold overnight or not. But yeah, this was the potential for this trade, and the other one to the liquidity. And normally I just position myself on a stop order on the breaker structure, because most of the times from what I've seen, if you tend to try the limits and you predict these reversals quite well, price will often not tag you in and it will just go immediately in your direction, right? In the reversal move. Then guys, in the next day, we sweep what? The previous daily low. We have market opening, we have the previous daily low, we have this, and not only this, if we zoom out even more, we have the previous low of 2 days ago, which is also super relevant because there is some structure here. And once we sweep it, and it's London close, and the New York session was all bearish, London close tends to be a retracement of the day, which can mean a bullish move. So then you can maybe take advantage of this retracement on London close. Now, one thing that's dangerous here, and it's why I didn't show you a part of the left, is because you have a huge trend line that's being built. As you can see here, 1 touch, 2 touch, 3 touch, 4, 5, 6, you know? And so maybe everything that I said previously was just bullshit and trend lines actually work. Well, first, I don't necessarily need to be right, because before I even position myself, I'm waiting for the liquidity sweeps. So in case they don't happen, then I don't have a trade, and so I don't lose money. Second point, it doesn't mean because it doesn't sweep some sort of liquidity that it isn't a liquidity at all. It's just that price is building more liquidity towards it. And by building more liquidity means more support resistance traders, for in this example, will be putting their stop orders above or below the current support resistance or trend line or whatever. You can see here, we have this resistance, 1 touch, 2 touch. You can imagine a lot of people putting their stop losses here, right? In case they're shorting, or a lot of people putting their stop orders here in case they're buying after the resistance has been taken. Same with this scenario. We're building a trend line, and I'm not expecting it to work forever, to always respect it, because sooner or later we're gonna take it, and if we end up doing so, then the sweep of this trend line, for example today, would mean the sweep of the previous daily low as well, right? Because the trend line goes like this, it's already up here, and if we do end up sweeping it, we sweep the trend line and we sweep the previous daily low. And then we have potential longs to the upside. So this is the 9th of December, the same day this guy was recording live, and as you can see, the price went to sweep that same low with the trend line, then went from one liquidity to another, to then another, to then another. This guy doesn't know what he's talking about. He's a scammer, right? To go to that higher time frame liquidity that I've shown you on H4 with the red line, to go towards this trap, because people are putting their orders around here, because this is where price initially did this meltdown, and because we always go from one liquidity to another, and to another, potentially to another. Okay? This low was the low that made this high. So now people might expect to buy from here. They're already trapped out of the markets. And right now, they think that we're actually bearish and they might try on short. I know this is a mess, but I hope you understand, because liquidity could be the best concept that you may add to your strategy, simply because it's logical. It's logical, and we actually understand what price is doing, why it's doing so, where's the liquidity, where everyone is positioning themselves, so we can avoid positioning ourselves like everyone else and actually trade after everyone has been taken out of the markets. I was showing a case study of ES here, but just know that you can apply this to any other pair, right? We have EU, you can see the lines. You can see the lines going from one liquidity to another. Same with EU, it's looking even more beautiful, right? We go for the lows, to go for the highs, to go for the lows, give a reaction, go for the lows, right? Here, when we sweep over the lows, to sweep the highs, to then sweep the lows, right? I might have a buy here, right now. No, don't tell me January or December. Fuck! Man, he's a scammer! You can't keep getting away with this, bro! So if you found value out of this video, make sure to give it a thumbs up, hype this video up, join our Discord if you haven't so, and I'll see you on the next one, boys.